Talking about the sectoral indices and the sector-wise, if you look at it, is the auto sector that's under pressure. Pharma, FMCG seeing slight bit of a red on the screen, while on the gaining end, it is metal, IT, realty, as well as the private sector banks. So that's the way how the markets are panning out right now. Somit, definitely a great day coming in for select pockets of the market. FMCG, no doubt, under pressure, a tad bit under pressure in trade today. But
in fact, it has been under pressure for on a YTD basis. If you see, it's one of the top losers sectoral wise. If you see, it's down around 5.5 odd %. And hence, on this edition of BNSN Lens, will zoom in on what the FMCG sector is doing, and more importantly, what's the road ahead for the sector. First up, let's hear out the word coming in from Sunil Duggal, the former CEO of Dabur, on the growth roadmap he's seeing for the year when it comes to the FMCG space.
We do expect growth to be in the low to mid single digits in the first half of the year, even though there are some tailwinds with regard to a good Rabi crop, etc. But overall, the demand situation remains muted. And the second half is what I think we can look at to perhaps fuel some growth, predicated on a good monsoon and therefore a good Kharif output. And perhaps also on the back of a low base, so optically we get the illusion of better growth. My concern going forward is not so much on the top line, but on the margins. Now, we've had a fairly benign margin environment over the last few years on the back of a low base and fairly decent inflation lines, but not to be taken as a given. We already seen inflation creep up in some key raw materials, and this could accelerate in the event of any disruption in the Middle East, external triggers like that, or internal issues like poor monsoon.
All right, then moving on. It's summer, and that is proving to be a magic wand for some categories. Definitely not for us out here when you talk about ones who are sweating it out in the sun. But we also caught up with Akshay D'Souza, who is the Chief of Growth and Insights at Bizom, into what he had to say about the summer panacea for the sector and roadmap for rural recovery.
An early summer has come in. I think is definitely going to be positive for a lot of categories. However, there is definitely a headwind from a confectionery and chocolate space where cocoa prices have soared. I think you see a lot of price hikes there. But across most other discretionary products, we are seeing an active participation of brands in trying to even correct prices so that they drive consumption. So I think rural, don't write off rural anywhere. I think it's just a season away from getting back into action.
Well, don't about the rural recovery. That's the word coming in on the rural demand. Now let's scratch a point further and hear out comments from Abneesh Roy, the Executive Director of Nuvama Institutional Equities, as well as on the rural recovery and price hikes for the sector going forward.
Recovery is still awaited. My sense is in FY25, with a normal monsoon forecast and local players competition getting anniversarized, I would say that rural recovery can potentially start from Q2 by 25. Because of the gross margin pressure coming back, consumer companies will take a price hike. We have already seen in cocoa and coffee, a lot of players thinking of price hike. They have already taken. So that will also aid the overall revenue recovery, which has been very muted for the sector, especially in rural, for the last 1 year.
All right, so that was the complete picture when it comes to the FMCG sector, right from the key trends to what the roadmap for the growth and rural recovery is looking like. So then let's take the conversation forward with our guests to see what are their top picks as well as what their views are coming in on the FMCG sector. We are joined by Kush Bora on the technicals, while on the fundamentals, we are joined by Rajesh Agarwal. A very good morning to you as well as Rajesh. Thank you so much for joining us on ET Now. And Rajesh, coming to you first, we've had a slew of FMCG counters actually report their Q4 updates. While some were good, some were not that good in a particular sense. Some of them definitely indicating there is some sort of a recovery creeping in for the rural sector. And also you heard what the guests had to say. What's your take coming in for the FMCG space? Are you gung about the space? No doubt. Like Somit said, YTD, the index hasn't done anything.
Good morning, Cheryl. Good morning, Somil. Good morning, Kush. I heard three guests they were talking about, including Mr. Duggal of Dabur. But we have our views that last 4-5 quarters has been pretty bad for FMCG companies because of demand not picking up. But going forward in the next second quarter onward, we feel that it's just a matter of time that the demand picks up because of various reasons. One, strong micro indicators are there, expectation of a good monsoon and Rabi, and not to forget that input prices have gone down for some companies, and that might help in increasing the margin. Last few quarters, of course, rural demand was bad, but we have entered into election phase, and we all know when elections come, the rural spending goes up because of the inflows. So we feel that in first quarter onwards, high single-digit volume growth could be possible, and with fall in input prices, the likelihood of good numbers is pretty much there. So from first quarter onwards, or maybe in the max second quarter onwards, we are positive on the sector as such. And if we talk of stock picks from this sector, you know very well, ITC would be my first choice. That has been there from the likes of 150 odd rupees, and it's almost twice that price. But still, we believe that ITC, having a strong balance sheet, aggressive portfolio, debt-free company, good dividend, I think this stock can still be accumulated for a longer term horizon. And the other one will be Varun Beverages Limited, not only because of the rural demand, but because of the kind of heat which has been predicted in the near future. So, and Varun Beverages is one of the largest PepsiCo manufacturer outside the US. Almost 90% of Pepsi sales in India is being done by Varun. They have taken over a company in Africa, and that's again going to add to the numbers. I think these two companies should be kept in a portfolio.
Well, and Kush, what's your view? How is the Nifty FMCG index looking? I believe it's trading below its 50 and 100, and a couple of stocks like HUL and Dabur are near the oversold territory right now, current.
Sure, Sumit. First, a very good morning to all of you. Well, you're right. The index is trading, close to its certain key averages, certain, even below the 50-day moving average. But there is definitely a bottom, formation attempt that is happening here. I'm not sure how successful it might be, because at every rise, the index has faced resistance. So there is a possibility that it might consolidate, with some sort of positive bias on some of these stocks attempting a recovery. But I think the broad range for the index would be 54,800 on the upside, and then 53,300 on the downside. So there could be some consolidation going forward. In fact, if we were to pick a handful of stocks in this space, first let me say there are a lot of other sectors which have good momentum going for them. So if anyone's looking for a trading opportunity or an investment opportunity, sectors perhaps do make the cut. For example, real estate and financial. However, if someone is particular about investing in the FMCG space, then let me share a couple of stocks from slightly different perspectives. First, the stocks that have actually been doing well, and we expect them to continue to do well. So in that category, you've got Colgate, Tata Consumer. If you see, these stocks have really bucked the trend that the entire FMCG has seen, and we do believe that this is very likely. So the stocks that have been momentum and will continue to do well, Colgate, Palmolive, and Tata Consumer. Now, on the other hand, there are these stocks which are attempting a recovery, and what we find interesting from that space are again two stocks. Rajesh has already discussed ITC, so I won't mention too much on that. But that is a stock which is on the revival path. There is a very clear bottom formation in place, and although the momentum is missing, but then there is surely a good risk reward ratio that is to be found in ITC. Set up in Marico. Other than this, maybe one Varun Beverages, as Rajesh mentioned. But other than this, we don't like too many candidates in this space, so we'll stick to some of these names that we've discussed.
Thank you, Rajesh. Thank you, Kush, for your extensive knowledge and idea about the FMCG space. Moving on, let's slip into a short break now, and post that we'll address the viewer queries post the break.